Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. It's Thursday and we have our regular guest, David Kuo, founder of the Smart Investor Singapore. David, good afternoon.
Hey, Selamat Tengah Hari, Thursday, down day Thursday, hey?
Yes, well, we're going to talk a little bit more about that in a bit. But before we get your insights, David, we're going to take a look at crypto markets and also regional stock markets. We're going to start with Bitcoin, which is at 19,186.6. It's down 0.5%. Ethereum is at 1,290.51. It's down 0.99%. Now, looking across the regional stock markets, we start close to home with you with the SGX. That's down 0.21%. Bursa Malaysia is up 0.84%. Shanghai is up 0.18%. The ASX All Ordinaries is down 1.21%. The Nikkei is down 0.99%. The Hang Seng is down 1.42%. And rounding up the numbers, we've got the Kospi, which is down 0.95%. David, looks like a pretty mixed bag. Tell us why.
Well, I think everything hinged on what happened in Wall Street last night. I think people are getting jitters again over in Wall Street. We had a good 2 or 3 days on the American stock market where people pushed to one side the threat of higher inflation and also the threat of higher interest rates. And then it all came back, with a vengeance yesterday. People were again very concerned, especially when some Federal Reserve officials came out and talked about how persistent inflation was going to be and how determined the Fed was going to be in terms of getting control of that inflation, and that they would continue to raise interest rates until they brought inflation under control. Then there was a little bit of a comment from Mark Mobius, a person who's very well known in these parts of the world for his management skills, and he said something that along the lines that the Fed fund rate could go as high as 9%. And then a lot of people started rubbing their chins and saying, could it really go as high as that? And I have to be in the same camp as Mark Mobius. I think that in order to bring inflation under control, interest rates do have to rise precipitously in order to sort of bring it down. And I don't think, 4.5% or 5% is going to cut it, Brian.
And that's really a scary prospect, especially people who are now sitting on expensive mortgages that they're soon not going to be able to afford making a repayment on. Now, David, before we get back to you on that issue again, I want to talk about something that's really hit home today. The Hang Seng is at its lowest point in 13 years. And as someone who has lived in Hong Kong before, I need to ask you this. Are the Hong Kong exchanges best days past it already?
Okay, I am a Hong Konger. I was born in Hong Kong. I grew up in Hong Kong. I obviously, sort of left Hong Kong in the late 60s to come over here to Singapore to study. So I have a lot of friends. I have a lot of allegiances with Hong Kong. And I think people need to understand what made Hong Kong special. It was because of its free market philosophy. Hong Kong believed in the total free market, the laissez-faire government where it was hands-off all the time, and they just allowed businesses to do what was necessary. And if a business failed, it wasn't the government's fault, right? I mean, I remember when there was a bank run in Hong Kong, the Hang Seng Bank at that time in Hong Kong, there was a bank run, and even then the Hong Kong government didn't actually step in to rescue Hang Seng Bank. It was left up to HSBC, or Hong Kong Shanghai Banking Corporation in those days, to come out and save Hang Seng Bank, because HSBC reckoned that if Hang Seng Bank failed, it could have serious knock-on effects on other banks in Hong Kong. And so HSBC came out and bought Hang Seng Bank, which is why Hang Seng Bank is now still part of HSBC. So that goes to underline, the philosophy behind Hong Kong, that the government says, you fail, right? It's not our problem. It's not up to us to try and sort of do anything about it. Now we have the exact opposite. Now we have a government that interferes in just about everything. They interfere in people's lives. They interfere in people's politics. They even interfere in what people think. And I think, that is very dangerous for Hong Kong. And it means that all of that secret sauce, all of that magic ingredient that made Hong Kong so special is slowly being dismantled. And why that is happening is something that people need to work out for themselves. Is it because of interference from China? And I have this feeling, that China is very jealous of Hong Kong, and China cannot accept the fact that Hong Kong has been so successful. And whereas China itself and even the Shanghai city, the Shanghai Stock Exchange, is not as successful as Hong Kong. And it is because of that kind of jealousy about Hong Kong that they are interfering in what is going on in Hong Kong. So are the best days of Hong Kong over? Sadly, I have to say yes. But does that mean that people cannot invest in Chinese or Hong Kong listed companies? The answer for that, I would say no. You have to be a stock picker. You have to understand what kind of companies, what kind of businesses will survive in that environment. And if you pick those stocks well, then I think you could be successful. But if you just simply say, I'll buy the Hang Seng index and I expect that to do well, I think that could be a mistake, Brian.
Now, David, on a different note, last week we had, in the last couple of weeks, a panic over the UK pension funds because obviously they were using leverage to basically juice up their returns. Now, have we opened a Pandora's box here in terms of looking under the hood of some of these pension funds?
Well, there are two comments I want to make about that, Brian. And the first one is we don't really always know what is going on inside pension funds. I mean, who knew that those solid pension companies were using leverage in some way to juice up the kind of returns that they were able to deliver to their subscribers, to their members, and to the people who relied on those pensions? It wasn't really until something bad happened that people went, oh my goodness, let's have a look at this. And it looks like, wow, there's a real can of worms here. Will that happen to other pension companies? The answer is, I don't know, Brian, because some of these pension companies are quite opaque, and what they actually do in order to deliver, for instance, the annuity that we rely on, I have no idea. So I think in some ways it was the regulators. They are the people who are supposed to be looking into that. You and I don't have a right to go and have a look at a pension fund and say, yes, how are you delivering those returns for me? We don't have that luxury, whereas the regulators can. So I think a lot of regulators out there will be looking at the various pension funds and sort of saying that, right, how are you delivering these returns, and how risky are those investments that you have made, in much the same way that they looked at the banking industry back in about 2008, 2009. Who knew that banks were as precarious as they were? So that is point number one. Point number two is that I have always said that I am responsible for my pension, right? And so that is why I invest for myself, because I know that if I have X amount of dollars in my fund on the day that I decide that I want to stop working, then of course, I can draw down on that money, and hopefully it'll be able to last me until the day I die. So I use this 4% rule and say, if I have $1 million in there, I can draw out $40,000 a year at $4,000 a month, and that will be able to sustain me from the day I stop working until the day that I'm pushing up the daisies. So I look after my own pension, and I do urge people to look after their own pensions in exactly the same way, rather than rely on hope and rely on somebody else to deliver you that annuity, Brian. That's all I have to say about that.
David, thank you very much for that sagely advice. Thanks for coming on the show.
You're welcome. Thank you.
I'm Brian Fernandez, and I've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez, and this video will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.